Ladies and gentlemen, good day and welcome to the Balkrishna Industries Limited Q1 FY25 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not a guarantee of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rajiv Podar, Joint Managing Director. Thank you and over to you, sir.
Thank you, Sejal. Good morning and thank you everyone for joining us today. Along with me, I have Mr. Bajaj, Senior President Commercial and CFO, Mr. Ravi Joshi, Deputy CFO, Mr. Sushil Mishra, Head Accounts and SGA, our Investor Relations Advisors. Let me begin with performance updates. In Q1 of the financial year 25, the demand trends were healthy, reflecting in our sales volume growth of 24% year-on-year. Please note that the growth percentage has a positive impact due to lower sales in the same quarter last year on account of cyclonic issues in Western India in June 23. Despite a strong performance in Q1, we are witnessing macro challenges accentuated by recessionary fears in USA. Geopolitical tensions and inflationary raw material scenario coupled with high freight costs are there. This will result in a tepid demand environment for the remainder of the year. However, we believe we will be able to achieve a minor sales volume growth in this financial year. On ESG front, we have continued to extend our power requirements through renewable energy. We have 5 megawatt of wind power and 7 megawatt of solar power operational across our plants as of today. Let me now share some thoughts on the European Union deforestation regulation. As you may be aware, with effect from 30th December 24, tire deliveries to EU need to be in adherence with the EUDR or the European Union Deforestation Regulation. This regulation requires that the natural rubber used in the EU supplies does not come from the land deforested after 31st December 2020, as well as in adherence to local laws. We will provide further details in due course. Further, in order to promote sustainable practices beyond our manufacturing units, BKT recently announced its membership to the Global Platform for Sustainable Natural Rubber, or the GPSNR. With this, BKT is taking a step forward in promoting long-term sustainable practices, culminating in a more environmentally conscious and friendly production in line with the principles defined by GPSNR. As a member of GPSNR, we will have access to a platform that aims to standardize manufacturers' sustainability reporting and digital platforms for compliance with the requirements of the EUDR. Coming to the ongoing cases, we are working on advanced carbon black project with a capacity of 30,000 metric tons. This project is progressing well and is as per schedule. Further, we have commenced the operations of our new mold manufacturing plant at Bhuj. Please note, this plant will provide us mold for our internal consumption and will help bettering the quality levels that we have. Now, let me share with you a new capex that the board has approved. We have seen good acceptance and success of our OPR range of tires, which has given us confidence to add a capacity. Accordingly, we are embarking on a new capex spends of up to 1,300 crore or 35,000 metric ton per annum at Bhuj. This will, however, be executed in various phases. With this, I now move to operational highlights. For the quarter, our volume stood at 83,570 metric tons, a growth of 24% year-on-year. Our standalone revenue for the quarter stood at 2,741 crores, registering a growth of 30% year-on-year. This includes realized gain of foreign exchange pertaining to the sales of 52 crores. For the quarter one of financial year 25, 47% of our sales came from Europe, 29% came from India, 14% came from Americas, and the balance from rest of the world. In terms of channel distribution, 74 contributed from replacement, while OEM contributed for 25%, with the balance coming from off-take. In terms of category, agriculture contributed to 60%, while OTR industrial construction contributed to 30%, and the balance came from other segments. The standalone EBITDA for the quarter was 714 crores, registering a growth of 47% year-on-year. The margin came at 26.04%. Other income for the quarter stood at 83 crores. Profit after tax for the quarter was recorded at 477 crores, registering a growth of 53%. Our capex spends for the quarter one of this year were 200 crores. Our gross debt stood at 2771 crores at the end of 30th June 24. Our cash and cash equivalents were 2,946 crores. Accordingly, we have a net cash of approximately rupees 175 crores. The board of directors has declared an interim dividend of rupees 4 per equity share. With this, I conclude my opening remarks and leave the floor open for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Siddhartha Bera from Nomura. Please go ahead.
Yeah, thanks for the opportunity and congrats on a great set of numbers. Sir, first on the demand side, generally we are seeing Q4 being the strongest quarter in terms of year, and this time Q1 numbers have also been ahead. So clearly volumes have been quite good. So for the year, would you like to give out any guidance which you usually give, like how much volume growth you are expecting if you look at the entire year?
So as I said in my opening speech, we are anticipating minor growth from last year.
Okay. So basically, I think what we understand is near term the numbers or demand has slowed down a bit. Are you sort of getting similar signs, and how do you expect the recovery to play out going ahead?
Yes, we are seeing demand slowing down, and that's why we are saying that despite this quarter, by the remainder of the year, we will only be able to get a minor growth.
Got it, sir. So second question is on the freight cost. So if you look at this quarter, it has come down compared to last quarter despite freight rates and all going up. So can you give some more color about how do we think about the cost both on the commodity as well as freight in the coming quarter?
So freight rates were already negotiated. That is why the freight cost was lesser in the last quarter. But in the coming quarter, the freight rates have gone up. So you will see the impact in the coming quarter.
And so what about commodity? How much can we expect?
Commodity prices are also going up. So raw material, approximately 2 to 3% there will be increase in the raw material cost.
Got it. And sir, any price hikes have we taken to sort of pass on some of these freight and raw material costs till now?
No, till now we have not been able to take any price hike. Going forward, the market demand is a little weak, hence we are trying to see what we can do and what we can pass on. But so far we have not taken anything.
Got it, sir. So last question is on probably the capex side. Last time when we expanded Bhuj capacity by 50,000, the capex was much lower at about 800 to 900 crore, I think. Now with only 35,000 expansion, the spend seems a bit higher. So any thoughts why the spend is much higher, and how much CapEx do we plan to do probably for this year?
So that you're right that the values are different because this is more towards the mining tires, and also that, for this capacity, some utilities and all also need to be added, which will also be taking care of some future requirements. So that is all being done in the current cycle.
Okay, sir. Okay, sir. Thanks. I'll come back in the queue.
Thank you. The next question is from the line of Raghunandan from Nuvama Wealth Management. Please go ahead.
Thank you, sir, for the opportunity, and congratulations on strong set of results. Sir, firstly, on the USD euro rate for the quarter, how much was it, and how is the hedge rate for the full year?
So this quarter was 92 rupees euro, and next hedging is around 92.5 rupees for next quarter.
Got it, sir. And last 2 quarters have seen better growth in agri, especially in the Europe region. But going forward, you are saying a tepid growth. So can you talk a bit about how is the on-ground sentiments? What are your thoughts about it?
So we are yet seeing a market weaknesses come in this. Also, there is geopolitical scenarios, with the backdrop of everything that's happening across various regions of Europe and Middle East, and also US recession fears are there. So all of that put together, we are noticing a weak demand at the end user place.
Understood, sir. And lastly, on the freight cost, you said there would be an increase in the coming quarter. How much would be the increase? What is the range you would expect? Currently, we are at around 6% plus of 6.4% of revenue in Q1. What should we build for Q2?
It should be 8 to 9% approximately.
Thank you, Bajaj, sir. And this CapEx number I missed for FY25, how much was that?
Our CapEx in this quarter is 200 crores, approximately.
And for full year, sir?
Full year would be between 600 to 700 crores.
Got it, sir. Thank you so much. I'll fall back to the queue.
Thank you. The next question is from the line of Mumuksh Mandlesha from Anand Rathi Institutional Equities. Please go ahead.
Yes, thank you, sir, for the opportunity and congratulations on the results, sir. Sir, as you mentioned, demand has softened in recent times. What could be a channel inventory, sir?
It is increasing. Channel inventory is increasing, and OEM's demand is softer also.
And so on the freight cost, would partly the freight purchase has been passed on, sir, to the customer? On the freight cost, sir, has it partially the surcharge has been passed on to the customers?
Yes.
Okay. So that's why we're seeing a smaller impact going ahead also.
Right.
Sir, even the increase in the surcharge, the freight surcharge has delayed the price hike planning, sir?
Yes, that is also impacted. You're right.
Got it. Sir, on the OTR CapEx, can you broadly, what kind of a timeline would be the implementation for this CapEx?
We'll come back to you in the coming quarters.
Got it, sir. And just lastly, what would be the carbon black revenue share to third party, sir?
50%, sir.
50% of the
carbon production.
Okay. And that is around 6 to 7%?
8%, approximately 8% of our sales.
Yeah. Okay. Thank you so much for the opportunity.
Thank you. The next question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, hi, sir. Congrats on good numbers. Firstly, you mentioned that channel inventory is increasing. Is it like meaningful increase or only normal increase? Hello?
Yeah, so it is the Q1 which numbers we have you've seen has helped them increase it, and now we are seeing a softening. Thereby, we are saying that the demand is we are seeing timid demand for the remaining of the period.
So is there a case that probably because of registration, because the transit time has gone up, that's why probably because of supply chain disruptions, the distributors have stocked up a bit more during last quarter?
Yes, one of the reasons. That is also one of the reasons.
And you talked about this OTR CapEx. Will it be a large chunk would be your 48-inch plus stacks, or how should one look at it?
No, it's the whole mix of mining tires.
Whole mix. And especially because we had entered 5 to 6 years back in this ultra large mining tires, and that was one of the growth areas that we had targeted. So how is the progress in that? And probably if you can share maybe around roughly what percentage of overall volumes today is coming from that 48-inch plus?
So there is a good acceptance, and that's why when this new product mix expansion that we are looking has been mainly for mining segment. So that itself indicates that our products are doing well, and that is I don't have the breakup of what is the exact sales of 47-inch and above.
And it would be a mix of bias and radial both, or only radial?
Only radials.
Okay. And lastly, on this, rest of the world is doing well, like especially last quarter. This is like CIS country?
Mainly India.
No. The rest of the world is, apart from Americas, Europe and India, everything else is Asia, Middle East, Africa, rest, or Australia.
Like any particular region which is doing well for us?
No, all over. So all over they're doing well.
Okay. Thanks. That's all from myself.
Thank you. The next question is from the line of Jinesh Gandhi from Ambit Capital. Please go ahead.
Hi, Rajiv. First question on the cost inflation expected in Q2. So we are expecting 2-3% increase in RM basket and similar increase on the freight side. So, and currently we don't have visibility of price hike. So do we expect a substantial pressure on margins in Q2? I mean, as against 26%, you expect it to go back to 23-24%?
Last year, full year, our EBITDA margin was around 24.8%, and we will be striving for the same range for the whole of the year.
Okay. Got it. And secondly, while we talked about 24% plus growth in our wholesale volumes, any sense on how retail volumes are trending on the ground? Are they flattish, or we are seeing some growth there, or they're still declining?
No, that is, we are seeing it to be weak. That is why the channel build-up that I mentioned earlier has taken place.
Okay, so it's still declining. Got it. And lastly, with respect to the OTR CapEx which we're doing, so I mean, a very basic question, would intensity of SKUs be higher in OTR, or Agri needs higher number of SKUs?
Yes, they will be higher.
Higher in OTR?
Yes.
And hence the CapEx also be slightly higher because of higher molds requirement. Is that correct understanding?
Yes.
Got it. Great. Thanks, and all the best.
Thank you. The next question is from the line of Pramod Amte from InCred Equities. Please go ahead.
Yeah, hi. Thanks for this opportunity. So when you're talking about the slowdown, is it related to industrials or agri or both? Where are you seeing specifically?
Both.
Okay. And if I have to look at your industrial for this quarter itself, it's down almost around 18-20%. So in that context, do you see any sense to go for a capacity addition now, or you can delay it?
Sorry, I don't know which number you are referring to because
The tonnage which you are given for YOY, if I have to look at, compare versus last year.
On the industrial construction mining OTR tires, we have a 19.3% YOY growth. Across all the segments, whether it's agri, OTR, there is a higher double-digit growth. So There is no
OTR is
from an YOY perspective.
oh, nearly 20%. So that's why I'm confused. Which number are you referring to, sir?
Maybe my base numbers are different, and hence I see that
Because
coming down.
it will be wrong to comment on wrong numbers. So
Okay, sure. Let me correct. But you feel what you are still not commenting on the timeline when you want to implement this, right? Or usually
we have got the approval. We will work it out and announce it in the coming quarters.
okay. And if I had to look at, is the ASP trend for OTR versus agri substantially different? If I had to look at ASP per ton or per kg, and since you're doing a more capex, that's one. Second, in the current capacity, what is the split you have versus agri versus OTR?
So ASP for the super giant is higher, but the rest is similar. Marginally, there's a marginal difference. So this whole mining project will be scattered across the entire range. So we expect it to be not a very different ASP. And the other question that you had, we'll come back to you later. I don't have those details.
Because I will get a relevance of what this 35,000 ton is on what base you currently have. That was the reason.
So
And the last one is, yeah, sure. And the last one is this time you haven't given the forex sheet. So in that context, what is the forex impact on expenses? Sales you are given.
On sales, it is 52 crores, which is
Right.
what we have disclosed in our presentation. On other expenses, it's about 11 crores.
Okay, sure. Thanks and all the best.
Thank you. The next question is from the line of Arjun Khanna from Kotak Mahindra Asset Management. Please go ahead.
Thank you, sir, for taking my question. The first question is, while you talk of this slowdown, sir, are we seeing any market share impact? Obviously, our sales have been robust in the first quarter. But over the year, do you see an impact to our market share? Are we losing share, or do you think we are largely maintaining or gaining share?
No, we will be maintaining.
Sure. Sir, the second question is in terms of the CapEx announced, you mentioned it's for augmenting capacity and also utilities infra. Is it possible to give a breakup or a breakup of this amount?
No, we'll come back to you in the coming quarters.
Sure. Sir, in terms of specialty carbon black, we had mentioned in the earlier call that we are on track for the first half of this fiscal year. Are we on track for the same? So we should see commissioning in the first half?
Yes, yes. I already announced it in my opening remarks also that we're progressing well and will be commencing in as per schedule. So we had announced it in the first half of this year and we will be on course for that.
Great. My final question is on the EPR. We had previously mentioned it's difficult to find out the exact liability. Have we crystallized that amount now, and have we provided for it for the previous years?
So we have one second.
So for EPR, whatever the obligation is applicable now, so that we have provided in this quarter, that is around roughly 4 crores for this quarter.
And for previous years, are they fully provided?
Yeah, it was already provided, and in that we are gaining something that we had already reversed in this quarter.
So the net impact for this quarter, you said, was 4 crores.
Correct.
Sure. Thank you so much, and wishing you all the best.
Thank you. The next question is from the line of Rishi Vora from Kotak Securities. Please go ahead.
Thank you for taking my question, and congratulations on good results. Sir, can you just elaborate on this EU deforestation regulation, like currently where we are sourcing our natural rubber from, and what would be the implication, if any? Will our cost go up, or is this a regulatory thing which we need to comply to?
So firstly, the coverage was about that we need to make sure that the rubber what we are procuring has not caused deforestation after the December 2020, and at the same point in time, it is sourced from a land wherein all the local laws while cultivating is being adhered to. As far as cost is concerned, it will have obviously some marginal impact on the cost for the rubber piece.
Okay. So that would happen from any quantification today would you like to give or maybe at a later point?
We'll keep you posted over a period of time.
And currently, where would we be sourcing our NR from? It would be combination of India and Southeast Asian countries?
Yes. From all Thailand, Indonesia, Malaysia, as well as African countries, Vietnam. So wherever we get the best deal, we buy from that.
Understood. Okay. Thank you so much.
Thank you. The next question is from the line of Rohit Jain from Tara Capital Partners. Please go ahead.
Yeah, hi. I just had a clarification question. Did you say that the volume is going to be flat YOY for the entire year, or is it going to be flat YOY for the remaining 3 quarters?
Entire year.
For the entire year, it's going to be flat YOY. Understood. And
Minor growth. So as I said, it will be with a minor growth. At the end of the year, we are confident of achieving a minor growth.
Got it. Fair enough. And this freight increase that you mentioned, is it going to be passed on to the consumers with a lag, or is there going to be an initial bigger hit and then gradually we'll be able to pass it on?
So we are working and trying to see how we can pass it on, but we will get back to you in due course on that.
Got it. Okay. Thank you. All the best.
Thank you. The next question is from the line of Basudev Banerjee from ICICI Securities. Please go ahead.
Thanks, sir.
Sorry to interrupt you, sir. May I request you to please use your handset? So we are not able to hear you. We have lost the connection of the current participant. We will move on to the next participant. The next follow-up question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, sir. On this India growth, obviously we are doing pretty well over here. This is coming from both agri or OTR, or maybe agri is growing faster than this?
Both the product mixes are growing for us.
And what kind of market share we probably would have in India agri, if we have some idea on that?
Very difficult to give you exact number, but between 6 to 7%.
Okay. And roughly what will break up in India, like so between the OTR and agri?
So that we don't have, and we can take it up later offline.
Okay. And this EUDR regulation that you talked about, is there already some mechanism in place that you can really find out that where this rubber is sourced from? All the modalities are there globally, or how would really comply?
Yes, system is already in place. Yet it to be evaluated or to be really procured, but we have already tied up with the manufacturers to supply that type of rubber.
And any idea, I'm sure that some of the companies will be sourcing even today that kind of rubber. How is that price versus normal natural rubber price?
It will be costlier than that, but maybe approximately to $300 per metric ton.
On a base of roughly how much?
1,800 on the base of the natural rubber.
And you have to comply completely whatever export happens over there should be that this rubber only.
Not on all that. Only for the European Union.
All the sales should be using that rubber only.
Only for the European Union, not all.
Yeah. But any, do they command some pricing premium as well? Like the tires made from that kind of rubber, or there is no difference?
Everyone has to use that one, so definitely there has to be some pricing. Whether it is manufactured in the Europe or in India or anywhere, everyone has to use that type of rubber. That will have the extra cost. So time will tell only how they are able to pass everyone.
Okay. Thanks. That's all.
Thank you. The next follow-up question is from the line of Jignesh Gandhi from Ambit Capital. Please go ahead.
Yeah, hi, sir. Just quick question on the EPR part. You mentioned there have been some reversals in 1Q of the prior period, and EPR provisioning is 4 crores. what would be the quantum of reversals and what would be a normalized ETR provisioning for 1Q?
Actually, in last year, we have provided on the basis of some assumption based on the market rate. But after that, we negotiate with the vendor and we purchase at lower rate. So we reverse some amount, that is a minor amount. And after that, this quarter, we have provided the exact amount. So the net impact is around 3 to 4 crores.
The net ETR impact is 3 to 4 crore in 1Q, and reversal would be similar or higher than that?
Similar amount, it is 1.5 or 2 crores.
Got it. Great. Thanks a lot.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next follow-up question is from the line of Mumuksh Mandlesha from Anand Rathi Institutional Equities. Please go ahead.
Thank you so much. Any outlook for the Indian market?
Sorry to interrupt you, sir. May I request you to please use your handset?
Yeah. Hi. Thank you so much. Any outlook for Indian market, sir?
Sorry, your voice was, we couldn't, we didn't pick it up.
Is it better now, sir?
Yeah.
Yeah, sir. Any outlook for the Indian market, sir?
It continues to remain positive for us and we look to expand our way in Indian market.
Okay. And sir, because of the EUDR, sir, and the price hike, would there could be some any pre-buying on account of that factor, sir?
Pre-buying?
Any pre-buying could happen because of the regulation norms, sir, where there could be a pre-buying, sir, because of price hikes?
Pre-buying before December, because whatever material goes after 31st December, it has to go the EUDR compliant rubber only. So we have contacted, but it will come in the fourth quarter only.
Got it, sir. Thank you so much, Manish.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
So thank you everyone for taking the time out and looking forward to meeting you all in the next quarter. Thank you.
On behalf of Balkrishna Industries Limited, that concludes this conference. Thank you for joining us and you may now disconnect your lines.